Otsukimi here. Who else would it be? This is the stock pick video for 2025. So, as you may or may not know, so I've done this for about 5 years now. I think this is year five, where I do stock picks, usually from Christmas or the day after Christmas. So I usually start at December 26th, and I make one stock pick per day until January 1st. Basically, a way to kind of, you know, I guess, give some content really between Christmas and New Year's, but also to show that my picks for stocks. And one of the reasons I do that is because I tend to do stocks much more aggressively. I do things a little bit differently than the average person. I don't necessarily think this is a great idea for everybody to do this either. You need to have a certain type of constitution. You need to learn to be wrong, actually, because I've had two, I've traded stocks for 9 years, and I think two of them I did not beat the S&P 500, and the other ones I actually beat sometimes by more than double or triple. And so you have to kind of work that out, right? So you have to be aware that this is risky and it comes with its own risk. My goal with this is not to try to be a gazillionaire, right? My goal is to look at picks that I think could outperform the S&P, to have some sort of push, uh, you know, as I work with the crypto market. You guys know that I am 99.99% in the crypto market, and so this also serves, number two, as a way to hedge with crypto. And so a lot of people look at things like this. So they take the S&P 500, or they take the stocks, and they put it into an index, or they put it into a mutual fund, all that stuff. And I think those are all good ideas. And I'm not a financial advisor. This is not financial advice. You guys know the routine with all the disclaimers. I'm not saying one way or the other. I'm saying that's what most people do. They put it somewhere. They treat the stocks as a very conservative outlook, and I do too, as far as my retirement goes, like 401ks and Roth and things like that. And but people that are in the stocks, they do things very conservative like that, but then when it comes to crypto, they're very aggressive. Bitcoin aside, you see in the CT world lots of high leverage trades, lots of small caps. Even with me, like I did a 3,000% on Bongo late last year. So a lot of these, there's this tendency to be kind of like soft and conservative for stocks, and very hard and aggressive and uh, what's it called, liberal, I guess, with the crypto markets. And I actually do the opposite, okay? Because I look at it this way. I'm going to kind of warm this up first to kind of give you my explanation, and then I'll get into the stock. So let's go ahead and do that. And so first, I'm going to share why I do things that way, because they will make sense for some, they won't make sense for other people, and that's okay. I'm not trying to win anybody over. I've had multiple requests to publish this video, so I'm going to do that. The second thing I'm going to do is look at the stock picks for 2025 for me. I've got 10 total, okay, about three, I think 3 to 4 of them are going to be within the realm of like, okay, that's kind of obvious, or not a surprise necessarily, but I think the rest of them are going to be a little surprising. So I'm not trying to be edgy or cool or whatever. I guess you can guess my age by using that lingo. But the thing is, that's the picks that I'm looking at that I think could outperform the S&P. I'm not saying they will. I'm not saying they won't. It's just I looked at the markets, looked at the research, looked at the fundamentals, and looked at that risk. In addition to that, before I get started, I'm looking at things fundamentally as well as technically. Okay, so for crypto, I'm almost pure technical analysis. Sometimes I'll add the fundamentals to it, but you guys know the disclaimers I give about the fundamentals, the correlation, the sell the news, all these sorts of things, right? I'm much more of a purist when it comes to technical analysis for crypto. That is not the case for stocks, and there's a reason for that. One of the reasons is that stocks are, and there's some exceptions, of course, but like stocks are viewed as ownership. Okay, if I have a certain number of shares of stocks, like I won't be able to get that as a normal person, but eventually you can own enough share where that makes a difference. You have the capacity to vote on certain things. You have different ways to look at this, right? Like stocks are directly, you want to talk about correlation. Stocks are directly correlated for the most part to performance. Okay, in a company or a stock or a share or the common and preferred stocks, things like that. But there's some exceptions like GameStop, right? But and there are some correlations with Bitcoin when it comes to Bitcoin related uh, stocks like Coinbase, for example, or Mara or Canaan, right? So those have built-in correlations, not because I want them to or not want them to, it's because they're built in, and especially like MicroStrategy, right? That's that kind of structure that you're working with. So it's fundamental um, analysis is built into stocks. You almost can't get away with it. Like you can do technical analysis by itself, and I certainly suggest that if that's beneficial to you. But with crypto, it's a bit different because crypto, it's we've seen these memes where we try to like there's the book, the Intelligent Investor, and people throw it in the trash. That's because some of this makes no sense. Okay, like you can tell me all you want about how memes are for the community, meme coins are for the community, and this that. Like we all know, we're just in it to get the token to come up. Yes, there is a sense of community with that. I think Murad is on point with a lot of what he says. I disagree with a few things, but for the most part, I think he's well, he's got a good flow of his what he says, right? But for the most part, like I think you'll do a better service to yourself if you focus on technical analysis, because there's nothing fundamentally long lasting about meme coins. At least I don't think so. I mean, maybe even with something like Dogecoin, right, or Bonk or things like that, or Shib, like those kind of wear out, right? And they have their moments. I'm not saying we should discredit that, but my point is fundamentally things are much more fundamentally um, stronger with stocks than they are with crypto, and that's the whole point why I add fundamental to this. So sorry for the long explanation, but that's kind of the thing. So I'll pause here. I'm going to go ahead and explain why I'm much more aggressive with stocks and more casual with crypto, and then we'll get into this 10 stocks. So it's a little bit longer video than I wanted to, but I wanted to explain a lot of my reasoning because I get a lot of questions about this. So I just want to dump it all and share it as needed. So all right, let's get started. All right, so the first portion of this, which hopefully it should be shorter than the last part because I got 10 stocks to cover, is my reasoning for going aggressive on the stocks. And so again, I'm not including my retirement stuff. So like if you're in Roth IRAs or 401k or any of that kind of stuff, that's I'm not including that. Okay, I'm talking as a retail ish, day trader ish kind of mentality, right? So like whether that's on Fidelity or Vanguard or Robinhood or wherever you trade at, right? That's what I'm referring to. I am not referring to contributions to your retirement. Completely different story. I don't think that you should necessarily be aggressive on that, especially the older that you get. The older you get, the less aggressive you should be if you have the amount of money that you need to have to retire, right? It's a whole other can of worms. Not really here to discuss that. But what I'm talking about as far as the retailish, day trade ish kind of mentality, which is not for everyone, by the way. I think 99% of you shouldn't even think about it. The other 1%, I only think 1% of that should even really consider it. You got to have the capital, you got to have the know how, you got to have the constitution to go through the ups and downs, especially if you don't have an insane amount of capital, and like unless you have like you know at least a few million to just play around with, so to speak. um it's gonna cause you some stress with the drawdowns or whatever, right? So you play that as it may, right? But like let's say if you have like $5 million at your disposal, and then it goes up 10%, well, you're doing okay, right? And so that's one of the reasons I also explain in my trading videos why I increase my risk. Okay, because I can make more money with one trade with a higher risk than I can with 20 trades with lower risk. Okay, and that's why I focus on high probabilities, because if it's a high probability trade, meaning historically, if there's a good chance that will be profitable, from the entry level in your execution, then why not add more risk? Okay, because that risk isn't actually risky per se. You're just still using risk management, right? But if I know that there is a 90% chance that I will make 10% on this, why don't I just increase my risk and then I make 20% or 30% or 50%? See what I'm saying? So that's why I do that. Okay, I wait and I pounce for the good opportunities. Now, the whole point of this section is to compare why I'm so aggressive. So I try to pick very aggressive stocks. So I focus on, you know, and this isn't necessarily my picks, but like a lot of crypto stocks, especially because I'm in the crypto world and I understand it's like, like I said, Mara, I should say, Kane and things like that. Um, you know, MicroStrategy is another one. MicroStrategy is a great option there that has done good. We'll look into that here in a second. But I want to focus on the S&P 500 and Bitcoin for a second. So, if we look at this from basically 2020, and we'll do best case scenario, right? We'll put in the low from 2020, so COVID, right? So let's say instead of freaking out during COVID, you bought the bottom, right? And you go all the way to current top. Okay, that's 130% here for the past 4.5 years. Okay, so your average, your um, over the 4 years, let's just round it down to four. You're looking at 137%, right? And so let's look at Bitcoin here, and you probably already know where I'm going to get at, but let's go ahead and look at this from 2020 here, and we'll do it at the same April. Okay, we're up 1,400%. A little over 14 and a half. So you have a 15x versus like a 2.6x, right? So I think you see where I'm getting at. Like my point is, if I want to look at something like a basic EMA, yeah, my point is I can conserve if I want to play hyper conservative like trend or whatever, or just buy and hold. Bitcoin has historically been better, and not just better, but way better. It's been one of the best assets for quite some time, like in human history. Okay, I don't have enough data with me, at least kind of freestyling this in my head to come up with something else or not. I don't really know. But my point is, 15x is better than a 2.6. So 138. Would you rather have 138% over the last 5 years, or would you rather have 1,400% over the last 5 years? Okay. Now you might say, Otsu, well, that doesn't, prior performance doesn't equal past or future results. Totally agree with you. I totally agree. But that doesn't mean it won't either. I'm not saying one way or the other. I'm saying like historically, this is how it's been. It does take some conviction. It does take um, a risk to understand like, hey, this might not happen, but this is where my convictions were based off of a lot of trajectories, not only in my real life but also in the financial world as well. It doesn't take anything to be super smart. Like I'm an idiot. Like I barely passed high school. I barely got into college. I got in. I went to college once. I basically flunked out. I literally was put on probation, and I barely got into my university. I've skid my way educationally throughout my entire life. Okay, and then I was able to excel finally. But the point is, it's like this doesn't take a lot of smarts. That's why I'm also focusing much more on simplistic opportunities than complicated ones, because a lot of you guys lose money because you think if you can get more complicated you'll make money, but that's exactly what's causing you to lose money. You're focusing too far into two more complex things instead of focus on the simple. So what the heck am I talking about, right? So let's go ahead and look at some strategies here. So I actually went to the weekly and I just turned on the 50, right? So one thing I can look at here, so let's look at the last cross that we had, right? And we'll try to compare this. Okay, so the last cross that we officially had was September 2023. And so we can go ahead and look at this. If you would have longed even the close of that, give you the benefit of the doubt that you would have been late to that, you currently would be up 246%. Okay, and if we look at the date marker, and we go out to here, you're looking at about 600 days. So about 609 days at 246, almost 250%. Okay, so we'll go ahead and look at that and see what the S&P 500 looks at using the same type of data. All right, so I got the S&P 500 up here. So what I'm gonna do is, I'm pretty sure I got this mapped out, but I'm gonna go ahead and just do it just in case. So I'm gonna map out uh, the weekly and map out like 600 days, just roughly. So right around there. Okay. And so we're going to go ahead and take a look at this as far as the price goes. Target right here. Okay. All the way to the top. And you got about 45%. I'll just put in 45. It's a little bit lower than that, but we'll do 45% roughly, 46%. So to me, it's kind of obvious here. The S&P 500 is giving you and this is not even since the 50. This is just since the 50 on Bitcoin. If you want to do the since the 50 on the stocks, it's actually a little bit lower than that. It's about 37%. So even if I give you the 45%, the 50 EMA is going to be um, was it like almost 5 times as much. The point is that if I just use the basic 50 EMA on the weekly, I make 5 times amount as much on Bitcoin than I do on the S&P 500. And that's, obviously that's just for the past time that it did cross relative to Bitcoin, not even relative to S&P, because it's actually going to be more like 6 times more than the S&P if we focus on the 50. And plus, you have all this choppage right here, right? And so that takes you a whole year. We can take a look back at Bitcoin and kind of see how that worked here. But even then, you only had like 1 or 2 crosses here. You probably wouldn't have made much money here, or even lost a little bit, to be honest with you. But you would have saved yourself so much here from 2022 and onward. So that's one reason why I say that. And I really want to be crystal clear about this. So, not including 401k, not including retirement options, I'm just talking retail ish, day trader ish stuff. Longing or spot buys on Bitcoin at the 50 EMA is going to be 5 times to 6 times more profitable historically than the S&P 500. Okay. And so that's my reasoning for being more aggressive with stocks, okay? Because whatever I can do conservatively on stocks, I can do better conservatively on Bitcoin. So what I'm trying to tell you is that a conservative trading mindset on Bitcoin on a high time frame is going to far outpace the S&P 500 historically, not necessarily guaranteed, but historically it has generally been the case, okay? Except for maybe like 1 year or maybe two at the most. I can't think of it offhand, but you get what I'm saying. So instead of trying to be casual and conservative on my stocks, I do that with Bitcoin. Okay, so let's say I have that million or $500,000 on the S&P. Okay, let's say I just have 200,000 at my disposal on the S&P 500 since 2023, right? That would have only gotten me, let's just round up 50%. So that would have got me $300,000, right? So I could, simple math, but I'm just going to add it here, right? So if you had, 200,000, you know, with, since 2023, and you went up about 50%, so times zero point 0.5, you would have got roughly about $3,000, okay? And sorry if my math isn't right on here, but that's what I'm looking at. So since September 2023. So you would have had $300,000, which isn't bad at all. I really want to clarify. That's actually pretty good considering normal standards. But we're not in the normal standards, we're in the crypto standards, right? So I want to look at this from a different perspective. So let's say you take that 200,000 into Bitcoin, and let's see if I can just add this without it. Okay. And then with Bitcoin, you would have had 250%. Now that's much more significant. So you take the 250%. So what this is really going to be is so it's 2.5, right? But you're going to add a plus one to add the original value to that. So that's going to be 3.5, right? And so you take the 200,000 times the 3.5, and you're going to get 700K. So you're going to have much more. Okay, you're going to have over double what you would have had in the S&P, right? So that's what I'm saying. Like if I have just $200,000 laying around and I want to choose between spot buy, spot long on S&P or Bitcoin, I'm picking Bitcoin every day. Okay, and that can work out different ways. You can DCA, you can buy $10 every day, whatever you want to do, right? So there's different ways to navigate that. And you don't necessarily need a lot of money too, and actually it works better if you don't have a. Well, I'm not saying it works better if you don't have a lot of money, but if you don't have a lot of money, historically, you've been able to take advantage of Bitcoin versus stocks. Okay. that's why I'm explaining it. Long story, long explanation. I know some of you probably got this 10 minutes ago, and I respect that. But that's why. So that leads into why I'm more aggressive with stocks. Okay, because I'm hedging my conservative estimates with Bitcoin. Okay, and so that allows me to say like, look, okay, the S&P 500 um, only gave me about 50% in the past, was it 2.5 years, which again is pretty good according to S&P standards. But can I get more of that? So let's say I have 2.5 years to get 50%. Can I do that with stocks? And the answer for me has been mostly yes. Okay. Even if you, so I've, out of the past 9 years, I've had 2 years where I did not beat the S&P. Um, and and this is one reason why I'm trying to be a financial advisor, get all my licensing, because I realize these are um, not normal statistics, right? Like I realize that people are into this. Like the more I keep talking about this, the more people are interested in me managing their portfolios, and I don't want to do that. I'm not licensed for that, and I'm not going to tell you any financial advice, right? Until I become an advisor, that's not happening, right? But what I am saying is, um, I want to focus on stocks. So let's say, let's say I make this 700,000, right? Like I have a cushion of about $400,000 that I can work with, so that I can be more aggressive with my stocks. And if I am aggressive and I beat the S&P, that's excellent. I beat the S&P. And again, I'm saying not including retirement, right? Not including any of those extra things, because those things are different. Um, but if I don't, so if I am more aggressive and I don't beat the S&P, well, I still have that $400,000 cushion, right? So that's how I'm going to explain that. So again, I apologize if it's too long or I'm giving you too much data real fast. Feel free to slow me down or speed me up. Some of you guys, you know, do 3x or whatever. Anyway, my point is that's why I'm more aggressive on stocks and I'm conservative on Bitcoin. Now, this does not include my normal day to day, my normal trading on crypto. Doesn't include the charts that I share on crypto Twitter and on Discord, things like that. So it doesn't include that. This is a separate portfolio category. And I've mentioned this before, not lately, but I've mentioned this before, how I prefer to partition my net worth into multiple portfolios, okay? Not just in stocks, but also in crypto. I think there's 4 portfolios just for crypto alone, or if not more. This one's in its own category, right? Again, conservative, basic EMAs, no leverage, no shorting, just spots, okay? Just spot buying. And so that's the explanation of why I do that. Okay, if you have any questions with that, please let me know. I think I did a good job explaining this, but if there are some questions, or even where you could trade with stocks and things like that, let me know. I'm happy to answer these questions. Now, that's the first portion of this video. The second portion is the portion you've been waiting for, and we're going to do my 10 stock picks of 2025. All right, so top 10, I shouldn't say top 10, but just my 10 picks for stocks for 2025. What I'm going to do is I'm going to separate this into 2 portions. I'm going to cover the 4 coins. That's how long I've been doing this. 4 stocks that I think are a little more popular than the rest. Okay. And then we'll go into the 6, outliers, I should say. So let's go ahead and get started. So this is going to be the 4. And so, to no surprise, the first one's going to be Tesla. Okay, and so we'll go into Tesla here. And there's a few different reasons for this, because I'm going to go to a chart here, but I'm also going to share this from a fundamental standpoint. So I'm going to try to do the fundamentals first and then try to go into the data. So Tesla, as you know, Tesla, Elon Musk, all that stuff. Okay, so it's one of these things where I do think, not just with, the whole presidential thing and his, Elon's impact in this, okay, but not only that, but the sectors that he's in. And I honestly think all sectors, but the thing is, like Starlink and SpaceX, you can't really focus on those on a stock, but Tesla you can. And one thing in particular that I think Tesla is good with is EVs. Okay, now I'm not a big fan of EVs. I'll be completely honest. I have drove Teslas. I like Teslas quite a bit. I'm not a big EV fan, but I am a technologist. Okay, I'm in favor of technology towards innovation. So anything that can happen from that, I'm completely fine with. I'm not one of those people that say, well, EVs are junk or just gonna do that. Just like I understand, there's going to be pros and cons. There's pros and cons of gas, everything else, right? And so I'm okay with that. I can get over that. But I like Teslas a lot. I like what they're doing. I think they're going to drive in the EV thing. There are some fundamental chances that they could be adding Bitcoin to their portfolio, but also too, I think EVs in general are finally going to get that growth that I think are going along with, especially with Tesla doing the full self-driving, the AIs, the Model Q, things like that. Okay, so that fundamentally that's why I don't think I really needed to explain that. Tesla's pretty much a hot, it's probably the hottest coin on or token or stock, hottest stock on this list. There's one that's really close to this, but I think this one's a little bit better. And so that's the fundamentals. Now, as far as the technicals go, now we do technicals a little bit differently, so I can't really do too much of it. But you have a swing high order block here. Now this is downward, so this is a deviation, and so you don't necessarily play this out the same way as you would crypto. And the reason why I focus only on crypto is because a lot of my strategies only work with crypto. Um, Now, with this, I do think that we're going to come up ahead of this here, and we can look for some growth with this. So we might go up to $500 or $600 at some point in this next year. Okay, and so I mean, if we can manage to do that, even at $500, that's about 27%. That probably will beat the S&P 500. But at 600, it's about 50%. So that's kind of what I'm looking at, right? So if you want to look at things from the pre-parabolic trend line, this is something that I'm looking for long term. Is eventually getting back up to about $1,000. Okay, and I think that we can do that. That might take a couple years, 2, 3 years. We'll see where that goes. I don't really know. The thing is, as far as stocks go, like um, I'm hesitant to give you like these super high targets, but you never know because we've seen it before. And Tesla did a stock split, so keep that in mind. Their market share is very good, things like that. So I'm looking at somewhere again, and I'm not I really want to focus on. I'm not predicting prices here. I'm not. I'm just looking at what I think looks good, and whether it goes to 500, 600, 6,000 doesn't matter to me. That's not what I'm looking at. I'm just looking at its potential, right? So that's what I'm looking at. 500 plus, hopefully. But we'll see where that goes because I can always be wrong, and if I'm wrong, I won't bring it up, I guess. So that is Tesla. That's the first one. Let's go ahead and go to the second one. Stock number two is Rivian. So it is in the same category with EVs. So this is another reason why I focus on EVs. Now, this is the last EV company on my stock list. There's only two of them. There is one that's adjacent to it that's really strong into AI. We'll get into that. But I picked Rivian here, one, because I actually quite like the chart. I actually looked at this from a chart perspective first. Okay. And also, too, they've got a lot of grants from the government. I think they are starting to turn things around a little bit. Okay. So I think that that is a consideration here. Okay. Two, um, we had a trend line here that we looked at, and we actually just flipped this. Okay. Not only did we flip it, but we also flipped the 50 here. And so I think this is a very logical um, consideration. Okay, if you look at this from the swing order block here, very good order block here. Kind of tapped into the zone. It's a little bit under here. You had two deviations, but that's okay. So if you look at that from the current price, you're looking at about 100, 150% roughly. Now I don't know if that'll get that in 1 year, like I said, but that's kind of what I'm looking at with that. So I do think Rivian's going to turn around. I'm not a big fan of Rivian. I see more Rivians out there. Now I don't know if people like them or not or whatever, right? So I actually parked next to Rivian the other day. So I don't know one way or the other. That's not for me to decide, but fundamentally they seem like they have a chance to get this demand, and it seems like the chart is favoring that as well. So that is Rivian. On to number three. Stock number three is Block, otherwise known as Square. Now Square was the very first company that I ever bought a share in, actually. The second one I ever bought was Nvidia, and can you believe it? I bought Nvidia at $39, and so, but with this, now fast forward to 2025, we have the Block. Now, I do like what they're doing, like as far as the payments and all that. They have Bitcoin on the ledger. There's a lot more people, a lot more stocks doing Bitcoin on their ledger, so just keep that in mind, or on their, on their payment thing, whatever you want to call that. I can't think of the name all of a sudden. But as far as the payment processing, I think that's still going good. They have struggled in the past few years, and we're kind of breaking even here. But I like this for a few reasons. One, you have your consolidation, accumulation phase, distribution, markdown, accumulation, okay, or consolidation. So we're back in the consolidation phase. This is matching very somewhat to a Bitcoin cycle, but without the impulse that we've had in the past year or two. Now that leads me into the second thing, is that we do have a pretty nice pattern here. You had your accumulation period here, and you have your retest. Okay, we have a drop down here, but most stocks lately have had this, and so I think on a conservative level, we could go up to like 140. Okay, and even at that conservative level, we're looking at about 80, 60%. Okay, so I still think again is these are not Bitcoin numbers, but they are, more than the S&P potentially. So we'll see where it goes and how that goes. If it goes up even higher, that's even better. I'm going to keep this a little conservative here, and I say that with hesitancy because I am trying to find more aggressive charts. But I think this looks good for this year. So that's number three. Let's go ahead and go to number four. All right, number four, Coinbase. This is probably no surprise. I actually wanted to add some other crypto related tokens on the list, but I didn't want to because a lot of them just didn't really look they didn't really look that great, honestly. And a lot of them I'm actually in right now, and I have been. In fact, a lot of those have done really good last year up until literally like the last 2 weeks of the year. And so it's very disappointing to me. But Coinbase in particular, I quite like. I think one, it encompasses most of the idea of crypto in a market. Okay, like MicroStrategy is not on my list. If you guys have been waiting for MicroStrategy, because I don't think it's going to perform well from now until the next 2 years, 3 years. Okay, I do think MicroStrategy is going to suffer from bear markets. Okay, and I think they're going to get a big blame. I think they are a little bit haphazard, and you know, Saylor wants to be haphazard, and hey, that's fine. It's his company, it's his money, whatever. But I think they will not perform well be, because of the bear market. Okay, they're almost too much in line with the Bitcoin cycle, where Coinbase isn't quite. It does have a little bit. I think it will go down in the bear market probably, but I also think it has room to grow because it's basically the hub for retail. Okay, and so what I'm really looking at with this, so you have your swing low order block here, kind of matches up, with this retest, again, retest again. So you have this here, but you also have from the initial down to this. So you had your retest on the trend line here. It retested reasonably well on this. So I think that we're going to kind of grow from here. So the outlook with this is that we're looking from this retest standpoint and trying to go up, to like 500. Okay, I think anything under 500 is probably going to be a steal long term, and that's about a 90% run from current. So that's kind of what I'm looking at with that. Okay, so very basic understanding. Again, a mix of fundamentals and technical with that. And as much as I don't want to admit it, I think Coinbase is probably the best front facing stock to kind of focus on not just bringing crypto for the masses, but also um, crypto being oriented to Wall Street, right? Because I do have some hesitancy about Coinbase's mission, right? It's just how I think, and I think you guys know what I'm talking about. But I do think it's a really good bridge between the legacy finance world and the crypto finance world. So anyway, that is Coinbase. Those are the four bigger stocks. Okay. Now we're going to go into the six more obscure ones. There are two of these on this list that you probably know of if you're into stocks. But the other ones are probably going to be a little more obscure. My intention is not to be cool and edgy. Like I said, I was looking at the markets, looking at the categories, and seeing what we have. So anyway, that is Coinbase. I just mentioned the other coins. Let's go ahead and get into the second category. So first up in the second category list is Palo Alto Networks. A little bit of a curveball here. PANW is the ticker. What they specialize in is a lot of cloud computing, just computerizing in general, but more so AI type computing, specifically in counter AI computing. And so, what I mean by that is that they are aware that AI is it's going to be the next topic for the next 10 years, 15 years, okay, even more, okay? I don't think people really understand how big of a deal AI is. A lot of us do, especially in the crypto world, but it's honestly like the next Google or the next. It's not even the next Google. It's the next Silicon Valley. Okay, but in this case, the Silicon Valley is for each of us. It's distributed, for the most part, um, Silicon Valley, where we each have the opportunity to do something. I in the background in my life right now, I am trying to connect like 10 AI agents together to make them all work for me to have my own team. Okay, um, especially for part of my business, it there are. It's not because I don't want to hire anybody, but it's just because I have a certain workflow, and I've found out that this is going to work to my advantage. So I'm going to have AI's agents talk to each other, and kind of figure that out. And I'm going to run a team of AI agents, and so that's just that's just on the fringe of what we can do now, much less what we can do 10 years from now. And I say that relative to Palo Alto is because we need to counter that in some way because if someone can hack you with AI, they're going to do it without you barely knowing, or maybe not even not knowing for like a week or whenever or whatever the whatever happens to you, whether you lose money in your bank account, whatever. Right now, Palo Alto is trying to prevent that to prevent you from getting hacked by AI, by maybe somebody in their house trying to hack you using AI networks to do that. This will be a good counter to that, so that and I think that that's needed, okay? Because if AI is going to improve, we do need safeguards, especially these safeguards being AI themselves probably will help. Okay, so that's the fundamentals by that. Now, as far as technicals, there's not a lot of technicals built into this, right? I'm basically looking at the 50 here, okay, and so what I don't really know what's at stake with this, but I do know that from 2023 to 2024, we pretty much had 100%, right? And I'll go ahead and keep that up here. From 2024 to 2025, we had basically 23, 24%. So we've either beaten the market or gotten really, really close to beating the market. So I think this is going to be at our advantage. Now, one thing I'm looking at here is that we are pretty close to the 50. If we can get that, if we can get that 168 there, and then we make a run for it, okay? And so I think that 250 could be a good target. If it does, it's about 48%, right? If you want to be even more conservative than that, you could target here, okay, with the pre-parabolic trend line, and you have about 25%. Either way, you're probably going to beat the market, okay? So that's kind of what I'm looking at. This is more probabilistic. I don't really have any key technical ways of targets, things like that. But those are just some options. Another option here is to basically check this trend line here. So you have sort of a C fork type mentality here. And that would put us somewhere in the 230 to 250 category as well. So that does kind of line up. So that's all just speculation, but this is much more fundamentally focused than the rest of them. And in fact, the rest of the list is going to be more fundamentally focused because they are lesser known stocks. So that is Palo Alto. That is the fifth one, I believe. Yes. So we are halfway through this list. Let's go ahead and continue. All right. So number 6 on my list is Parker Hannifin Corporation. So a little bit of a different category here. They focus on a lot of control systems like hydraulics, things like that. They also are more industrial focused, and this is something I considered based off of the new administration coming in, actually, relative to why like I do think there is a chance that America will build its infrastructure more, that will have more things like this, and so this is where Parker Hannifin kind of could make some sense here. Okay, and so that's basically the fundamentals. I can go into more detail about that, but that's basically it. Okay, and so it's one of these companies that are a little more not not consumer goods, nothing like that, but like that typically tends to go up gradually. So this is kind of a hedge to the rest of the coin list because it's probably not going to perform as well as the other coins, but it also looks again, historically has had a good chance to continue higher and work with this. So again, I'm going to do the same thing as we did with Palo Alto. If you look at this from 2000, basically 2023 to 2024, you're looking at about a 62%, right? And so if you look at that from then until current, you get about 38%. So you're beating the market well. You're not beating it as glorious as other coins, but you're doing a pretty good job with this, right? And so that's kind of what I'm looking at. So we could look for two things here. We could look for this to continue higher, let's say to like $800. Okay, if it goes up from here to 800, you got about the 26%. If it goes down to the 50, okay, and then goes up there, then you got even more at about 38. So that's kind of what I'm looking at. The numbers will be a little more conservative than the rest of the rest of the list on here, and I'm okay with that. Okay, because it's one of these things. This is one of the stocks that I'm okay with waiting, or not waiting, just sacrificing more performance for more surety, if that makes sense. So anyway, that is Parker Hannifin. Let's go on to the next one. Next one on the list is Roblox, RBLX. A little bit more popular, especially if you're into gaming and all that. Not quite as popular as Tesla and Coinbase, things like that. But I added this. So fundamentally, I added this because you guys know it's big into gaming. I still think that's going to continue. I am not a fan of Web3 games. Okay, I'm just not. I tried. I've really really tried. I'm not interested. They're boring. They don't make sense from a utility perspective because people just want to play games. Okay, people don't want to play games for NFTs or to make money. People are okay playing games just for the sake of it. Okay, whether that's a video game, a board game, whatever. Right. Now, this is where I think Roblox comes into play fundamentally, is because they have this kind of idea about games, right? And so they're also going to get into VR and things like that if they haven't already. So they're kind of, they're starting to widen their idea about this, right? So that's the fundamental aspect of that. Now, a few things I want to look at this from a technical standpoint. You have your swing order block here, and you're kind of in the middle of that, right? So you also have or your order block. Yeah, your order block. You got your swing high right here. So that's kind of what I'm working with as far as the details. Very simple. If we go to entry to current, it's about 32%. So you're probably going to beat the market there. If you go to range high, it's about 61%. So either way, we're looking at beating the market. It looks pretty good to me. I like Roblox quite a bit as far as all that goes. I don't know if I know anything inherently wrong with the company either. So that's kind of what I'm looking at. And by the way, like I know some of the comments that I might get, and I have gotten some, and it's well intended. So I really appreciate any commentary as long as they are well intended, right? Um, but the thing is, a lot of people are like, well, what about this? What about this? Because stocks, there's much more involved. What about the meeting with this? What about the voting? What about their, their revenue? And what about their, all this other stuff, right? And I'm not into that. I'm just not into that. Okay, and so I'm not saying I'm right or wrong with that. I just in 9 years I've never really focused on it. I've tried, I think like a year or two, but it actually did more damage to me than good. And so that's where I'm just focusing on a simple combination of fundamental and technical analysis. So anyway, that is Roblox. So we have three more left. Let's go ahead and get them finished. So kind of a wild card for number 8, Sprouts Farmers Market. Okay, this is a coin that I wish I would have gotten in 2020. Okay, because even if you go above the 50 EMA, you would have got 600%. Now, that being said, you would not have beat Bitcoin, of course, but 600% is pretty good. And so this is one of these things where I'm looking at this from, so fundamentally, I should stop and take it back. So this is one where I think the whole farmers, and I didn't do it because it says farmers market, but the whole like, with Kennedy tend to come up, I think there is, that's a catalyst. That's not necessarily the main driver, but that is a main catalyst. I think everybody wants to start living more healthier lives, not just as far as being healthy from a healthcare standpoint, which is what our, probably all the boomers and Gen Xers are wanting to do, but more so the millennials and the Zoomers want to have complete healthy lifestyles. Okay, live properly, eat good food, just put tallow back in fries, that kind of thing, right? And so I think we are going back to that, and I think that that's good. If that does do well, we're going to live in a good time, hopefully. And so that's one of the main drivers for this. In fact, the rest of this, the next two coins after this for 9 and 10 kind of work with the same kind of field that I think that this could work, right? And so that's the fundamental reason. Now, as far as technical, again, it's the same idea. So like 2023, 2024, 60%, right? And then from 2024 to 2025, just went crazy, 161%. So that's the main idea with that, right? And so don't think that this will just stop all of a sudden. It certainly could. As far as the RSI, you got a pretty big dip here, no divergence, nothing like that. But we could see another rally here, okay? And that's kind of what I'm looking at. So you could look at this from two ways. So even if I just focus on like the $200 range, that's a 43 percentile. If we dip all the way down to 101st, then you're looking at almost a 2x right there. So that's kind of what I'm looking at as far as like target ish things. Like I said earlier in the video, I'm not looking at targets here. I'm just looking at what I'm seeing on the market. This makes sense to me given the trajectory, given the industry that it's in, and given how we might perceive the next 5 years or so. So anyway, that is Sprouts Farmers Market. Let's go ahead and go to number 9. Number 9, Vital Farms. A very similar situation with Sprouts Farmers Market. And so I won't get into the fundamentals too much more because it's the same idea, right? So I'm going to look at this from a technical perspective. So first of all, you have your order block here that I like. Kind of encompasses this. If you want to do a fib block, this should theoretically be the middle of it. And let's see if I can do this as well. See how that lines up almost perfectly? That's not coincidence. That's just kind of how supply and demand works. So you have, and so what I did was the top and bottom of these bars, top and bottom of these bars. You got the middle structure. So we're at a good catalyst right here. This is very clean. Okay, let me see if I can get rid of that little. I'll get rid of that. So that's what I'm looking at. So you have your double midline here. You also have across from this. Okay, you had kind of a wedge going on with here, and so actually, as much as I put this in fundamentally, I actually quite like it from a TA perspective too, and so that's kind of what I'm working with now. You basically got a massive cup and handle over the past 4 years, so that's what I'm looking at. So I do think that we could get double this. So, but I actually think that we could even go higher to maybe like 100, but we'll see where that goes. So if we stop at a 2x here, we're looking at about $75. It's kind of what I'm looking at for my target. Okay, we're holding above the RSI. Aaron's looking good. This is looking pretty good here, in my opinion, for just some stock that frankly I've never even heard of before until these videos. So kind of what I'm looking at, and I guess we'll just see where that goes. Same category as Sprouts, like I said, and so nothing else needs to be said with that. Now, going on to the last stock on this list, and let's go ahead and check that out. Last one is Celsius Holdings. As you guys may or may not know, is the owner of Celsius energy drinks and a lot of other things like that. So I'm not too big into energy drink stocks. I tend to stay away from certain stocks, for example, like gambling stocks. I think it's like was it Fantasy Kings or whatever it is, things like that. Things that kind of people that deal with kind of, in my opinion, immoral or immorally adjacent things. And if you don't cater to that, then fine. If you do, that's fine too. I'm not here to tell you what you should or shouldn't be doing. Just I don't do it. Now, I say that to say I'm not a big fan of Monster. That's why. And now I'm not. I actually had a Celsius energy drink today, so I'm not against energy drinks by any means. But what really attracted me towards Celsius is its growth that it's had over the years, and I don't think that the chart justifies that. Okay, I think Celsius has done a very good job as far as this goes. I don't know the technicals. I don't know as far as the paper and the what it has done on paper. Fundamentally, it looks good. The chart, in my opinion, also looks good as well, because you have this whole structure here. Looking at this from the midline, it taps basically right into the midline, and you basically have sort of a divergence here. I think it was on a different time frame. It doesn't look divergent to me now. All of a sudden, I think it was 2 weeks. Let's see here. So anyway, I like the rounding on this either way. I thought it was divergent. Maybe it wasn't. I guess I read this wrong as a divergence. But as far as this goes, I still think it can go well. I mean, even if you get something very simple, like very basic from current price action to 50, you're getting about 47, 50%, and you're going to outpace the S&P already probably. And so another look at this would be this structure right here. And if we go from current price action to then, which I think could also happen as well, it's 134%. If you go back to this resistance instead, it's going to be 70%. So either in any of those three instances, you're more than likely going to beat the S&P if it does well. So that's kind of what I'm looking at. Another strength to this is if we recover the 50 RSI on here, everyone is forming a consolidation as it's going down. That's actually a good bullish sign. We'll see where that goes. But that is Celsius. So anyway, that is the video. I hope you enjoyed it. The stock situation, I probably should have said this at the beginning, but I did really take a lot of time. Is that my goal here is not just to tell you what to buy and then you buy it. That's never my idea. I'm just looking at the market and how I see them. These look good to me. Are they the the top 10 best stocks in my opinion? Not necessarily. They're just 10 that I really find good prospects, right? And again, my goal is to try to beat the S&P. Now, that doesn't always happen. As you can see, I only put one, maybe one and a half crypto stocks on this list. That was intentional because I put a lot of them on my list last year. And they've performed well last year, and so I think they might get some performance this year. I'm not discounting ones I've said last year either; those can continue to perform well. But I really want to go back to the reasoning with this earlier in the video is that I pick, it, I try to be more aggressive on stocks. Again, not including retirement, not including that kind of stuff. But as far as like regular day trading ideas or just buying and holding, I think Bitcoin is better than the S&P. At least it has been. That doesn't mean it will be, but I'm just saying as it has been. But I also want to put a disclaimer on this that I think the S&P 500 is still doing pretty good. I think for most of you, especially if you don't know what you're doing or if you just want to gamble, you're better off just buying the S&P and just holding it, okay? Because you're still going to get roughly 25% per year, which is pretty good. I'm not saying that we're going to get that, every year, for example, but from that to current was about 25%. Okay, so 25, give or take a percent or two, that's still really good. Okay, so if you have $1 million, you just made $250,000. That's still going to be enough for some of you. So some of you guys that have a higher income value, let's say 1 million or more, you're going to easily be able to live off the S&P. Okay, so whether you want to or not, or whether that's more complicated, that's not really part of this video, but that's what I say. One thing I don't get to talk about often that I firmly agree with is to not just try to ride things out. Like a lot of you guys want to make life-changing money in crypto, but you're not willing to put in the work for it, because some of you could make life-changing money if you take profits and on good positions, right? Like some of you get that 10x, you want the 20x, then it goes down to 2x, okay? And then you still make money, but then you're sad about it, right? And so that comes into play. But if you make like 50 different 10x's, you'd probably be retired unless you only start with $50, right? So that's what I'm saying. Part of this is going to be another strategy involved where you need to focus on yourself. You need to focus on how much your net worth you have, what your actual goals is, because some of you guys don't have any goals, and that's probably why you're not actually holding your money. Excuse me, because you're not making many goals, right? If you're, uh, and again, I don't mean any hard feelings, but if you're under 25 or 28 and your biggest goal in life is to get a sports car, like you're going to be in a rude awakening, okay? Um, Once you get a little bit older than that, because life will hit you much differently than you expect, and maybe it doesn't, and maybe you get 10 sports cars, okay? But what is that going to be worth to you? Define your goals, but one way you can do that is to make checkpoints, okay? And I think one of the best ways for most people to do that is the S&P 500. So I'm not here to discredit the S&P. I mean, this is a stock video, right? So I want to give credit to the S&P because 25% per year is still pretty good, considering you don't have to do much with it. The point is you want more capital. A lot of you guys are in crypto because you don't have capital. I think that's a good guess that you probably don't have as much as you do. And some of you, if I started with $50, okay, $50, and then I think I added another $400 over the next year after that. But some of you guys are sitting on 2 to 300,000 to start with. Do you realize what I could have done with 2 or 300,000 to start with? And some of you guys could put all that into, a coin casually over the next cycle and make 10 times that. So if you have $500,000, that would be 5 million, okay? And that seems relatively easy to do as long as you can just wait it out. But some of you don't, and whatever. Everybody's unique, so I don't want to. I'm not pinpointing. I'm not making fun of nobody, nothing like that. But anyway, just kind of an in summary to that, explaining my reasonings. I still think the S&P 500 is perfectly fine. It's a really good soft hedge, and sometimes being aggressive is just not the best. Even if you could, I know I'm kind of counterbalancing my own idea here, but sometimes being more aggressive isn't the answer. Sometimes it is just buying and forgetting it, right? So anyway, that being said, that's the video. Let me know what you think. 10 coins here. Happy to discuss more. I'll see you next time. Thank you for watching.